Welcome back to How to Value Business for Sale in 2022. Now today in part 5 I'm going to be looking at our valuation purpose and how exactly that impacts valuing a business in 2022. So as suggested, the name of this series is How to Value a Business for Sale in 2022. Now when I speak to people and we talk about business valuation, a sale is often the most common reason or purpose they can think of for getting a business valued. Whereas in reality, a buy or a sell, so buying or selling a business, is not the most common purpose of why we value businesses at InteleK. So what exactly do we value them for, if not for what we call a transaction to buy or sell? There's two other main reasons. The first one being what we call tax compliance. So whether we're talking about Australia and the ATO or the US and the IRS, there's a range of reasons that businesses of privately held companies must be valued to comply with local tax regulation. In an Aussie context, for example, this may be necessary when somebody's transferring their company from a proprietary limited company to a trust. There may not be an actual transaction here, but the value of that business needs to be identified as part of that process. Conversely, in the US, they have similar reasons for valuation there, but one of the main ones in the US, which we do not have in Australia, is for gift and estate tax. This means that the value of privately held businesses often needs to be identified for gifting, in particular, parts of a business to other family members, or upon a death, the value of that estate needs to be calculated. And if there's a privately held business in there that gets handed on to another family member, for example, there may not be a transaction, but we need to identify the value of it to settle that estate. So there's a whole heap of reasons or purposes, as mentioned, to value businesses other than for a transaction. So what actually changes, or do we actually do anything differently when we change the purpose? Now, effectively, the short answer there from our side of the ledger is no. Our valuation methodologies, techniques, and approaches, as discussed in the prior three valuations, so the income approach, the market approach, and the asset approach, none of them change. However, depending on the purpose, this may change a range of things in terms of exactly what we produce at the back end of the valuation to exactly what information we receive during the valuation process as well. Now, information is key because the valuation, as we say, is only ever as good as the information that we get. We have a range of processes that we use, such as our three approaches, but it all depends on the information that we are provided from the client or the company, as well as information that we get from external sources as well. So let me give you another example. Another very common form of valuation purpose is for a divorce. So think about, we have an example here where we've got a business that's owned by mum and dad. Now, mum and dad have a divorce and they need to identify the value of this business so that they can settle the divorce. However, only one of the two partners works in the business and knows anything about this industry. So logically speaking, it's quite plausible that one of the partners may buy the other partner out. However, to do this, we need to know the value of this business because it's not actually being transacted what we call at arm's length or to an unrelated party in the marketplace. So we thus then need to identify the value of this business as part of the settlement of the marriage, if you will. But in a case like this, the information that we get from either side or either party here can be very different. As you can imagine, it's quite plausible that we have one side of the two partners driving a value higher and one side driving the value lower. So effectively, our valuation process is exactly the same regardless of the purpose, but the information that we get, which is then used, can be very, very different depending on the purpose. So that's just one example of how things may change. Another thing to consider is something that we call the standard or the basis of value. And depending on the purpose, this can dictate what exactly is the standard of value. So by standard, I mean we typically have two main standards that we consider or we value at InteleK. One is under a going concern assumption, and the second one is under a liquidation assumption, effectively where a business is being wrapped up or liquidated and its assets and liabilities are being valued under such a scenario. Now, typically under the liquidation standard or premise of value, this is where we use something closer to the asset or the cost approach to value a business under this standard of value. Conversely, a going concern business that is cash flow positive quite often can be valued under the income or the market approach, for example. So at the end of the day, regardless of whether we're valuing a business for sale in 2022, for sale or for some other purpose, the approaches that we use at InteleK and within the market are the same. However, there are a range of other variables that can change in that process depending on their specific purpose. We'll see you in the last video of the series, number 6, coming up to wrap up this series.